Are you 62 years or older and contemplating a reverse mortgage? Well, you click the right button. So today we're going to go over the top 10 basically essentials you need to know before you get into a reverse mortgage. So my name is Dan Frio. I'm actually a nationwide mortgage loan officer, licensed in all 50 states as well as Puerto Rico. I'd love to work with you. I'll have all my information at the end of this video, also with some links that you can schedule an appointment with me, or maybe even get the application started. So let's talk about reverse mortgages. Now, the reason why I'm going down this path is I'm going to be 60 years old here soon, and a lot of my friends and family, they're 60 years older, and they come to me a lot of times and ask me questions. And one of the biggest topics from my elderly friends and family is, what is a reverse mortgage, Dan? All I know is I got to give the bank my house, and then they'll not have a mortgage payment. But isn't that stupid if I have a ton of equity in my home? That's probably the biggest myth that we have to get past in this video. So let's get to the top 10 essentials that you need to know before starting a reverse mortgage. So I'm just going to go through these numerically, and then at the end of this, I'm going to just basically summarize the whole thing so you fully understand what a reverse mortgage is and basically the pros and cons behind them. Okay, so to start out, basically what a reverse mortgage is, it's an FHA loan. That's all it is. But it's an FHA loan that doesn't require payments. So here's how it works. When you're getting an FHA loan when you bought your home, or possibly you got one, it's called a forward because they're actually giving you the money and you're paying them back. So that's actually what's called a forward mortgage. The unique thing about a reverse mortgage is you're saying, okay, here's the deed to my home to use as equity or collateral, just like you would any other mortgage, but you're going to keep that collateral until I either pass away, sell my home, or just move. And that's what a reverse mortgage is all about. Okay, so that it would eliminate your mortgage payment. But here's the thing that a lot of people don't understand as well. You don't have to make a mortgage payment, okay? But you can. Okay, so let's say, for example, you're like, okay, I want to qualify. I can actually afford maybe $1,200 a month, but that isn't enough to qualify for a mortgage for what I need. Well, a reverse mortgage might be the opportunity for you because you don't need to make a mortgage payment. You don't really need to make a mortgage payment forever. You do have to stay in up to date with your homeowners insurance and your real estate taxes. And a lot of people don't understand as well, you can make a mortgage payment because some people are saying, I don't want to deplete all of my equity for my heirs. So what you could do is you can make a monthly payment. It could be interest only. It could be principal and interest. It could be $100 a month if that's what you want. You can make any kind of payment that you want, but you don't have to. That's the key point here. Okay, so a loan, you have to be 62 years or older with pretty much a lot of equity in your home. So you have to be at about a 50% of your home's value in equity before this will work. Okay, the next thing is you get to keep your home. Basically, what you're doing is just like when you did with a mortgage, the lender is holding your house as collateral until you pay it off. Well, the same thing is happening here, okay? And then it says repaid later when you move, sell, or pass away, and then your heirs can take it at that point. And I'll go over that in a few topics here also. Qualifications: you must live in the house as your primary home, and you must have enough equity in the home. So basically, like I said, take your house value, and if you owe more than 50% of it, it's probably not going to work. But if you owe less than 50% of it, you're probably in a good position. Okay, so now different types of reverse mortgages you can get. Well, the most common is the HECM. It's basically, it's setting you up that you can get monthly payments. You can get a lump sum. You don't really have to take any money. Maybe you're just paying off all your creditors, or maybe just your current mortgage to make you mortgage free. So that's the most common use program out there. There are other ones that are called proprietary. Those are for large estate homes. And then there's single family purposes limited to, like, if you're looking for repairs and things like that. But most people go with the HECM. That's the most popular. Now, the pros and cons, here's where it really gets out of hand. The pros: no monthly mortgage payment unless you want to. You can get a cash lump sum at your closing, or you can get monthly payments, or you can even get a line of credit to use when you need it. Think of that. Let's say tax time comes around, you owe a big whopping payment of $4 or $5 grand. You can go to your reverse mortgage, pull out enough money to pay those costs for you. Okay, the cons, here's the cons. Well, let's get back to this one more thing. No recourse. Okay, you will never owe more than your house is worth. So here's the unique piece about this. Let's say, for example, you took out a loan when you were 62, all right, and you lived till 90. And you depleted the value of your home multiple times. Well, your heirs, they're going to be when you pass, your heirs are probably going to say, I don't want that. He owes $1 million on a $200,000 home. Well, that can't happen. Okay, because of right here, there's no recourse. What that means is at any point, you cannot owe more than the loan is valued at. So, or the house is valued at. So let's say, for example, at the end of this, when the person passes or you pass away and you owe $400,000 on your reverse mortgage, but the appraisal on the house is only worth $350,000. Well, you can just basically hand your house over to the bank and just say, well, I ended up $50,000 ahead. Well, let's say, for example, the house is worth $500,000 and you only owe $350,000 at that point. Well, your heirs can take it over. They can refinance it. They can do whatever they want with it. They can pay it off and keep it. Or if they don't elect to, they really want it, well, they can actually turn it into the bank, or better yet, just sell it, take the proceeds, pay off this, and keep the rest. But here's where it gets tricky. The pros and cons. The cons are this. It's really costly. And this would avoid most people from getting this loan. I got an idea for you, though. I might be able to save you thousands and thousands and thousands of dollars. Okay. We do a lot of reverse mortgages, and actually we do a lot of reverse mortgages in general, but we love working with seniors to help them navigate this environment, because we can, in most cases, we can probably save you in the range of about $10,000 in origination fees, because the origination fees on this program are crazy. So what I usually do is I usually discount them tremendously to help you out. So the one reason, if I'll put it this way, if one bank got you approved, then most likely I can get you approved as well. But I can almost assure you that our costs are going to be much less than what other lenders have. And if you don't believe me, just schedule a consultation and let's talk about it. All right, now the next thing we want to talk about, how do you get your money? Well, you can take it as a lump sum. Just at the closing, you're like, okay, I need 20 grand or something like that to do what you need to do. Or you can make monthly income. It's like, Social Security check isn't enough to make your monthly debt load. So you can get a monthly check. Or you can just have a line of credit. So you can just use it as you need it, for big bills and even small bills. So you can use it basically at your disposal. That's what we usually do in most cases. We set up people with a line of credit. All right. The repayment rules. Basically, here's what it is. When the loan is due, home is sold, you have to pay it off. Last borrower moved out or passed away, it has to be paid off. Property taxes and insurance aren't paid, it has to be basically paid off. So what they do is, in a reverse mortgage, you don't have to make a mortgage payment. What you have to do is you have to maintain your taxes, property taxes, and also your insurance. And that's where a lot of times where the line of credit comes into play, because as these come due once, two, three, maybe 4 times a year, you can draw into your line of credit and get those paid off. Okay, so that's one of the best ways that people do this. And then your heirs, they can always repay the loan or sell the house. So that's probably the most common reasons there. Busting the myths. The first myth is the bank takes your home. No, they don't. It's an FHA loan, and that's all it is. But it has that feature where you don't have to make a payment. So what happens? Your interest just accrues month over month. You can actually make an interest payment if you want, so that interest doesn't accrue. But you do not give the house to the bank. You are still the owner of the property, and you're still vested as the owner of the property. Myth number 2, reverse mortgages are scams. They are not scams. Actually, they're governed by HUD, which is it's an FHA loan. So it is actually a government-sponsored loan in most cases that you're going to get. So that ensures that it is not a scam. The next thing is a reverse mortgage right for you? Now, these are things that you have to consider. Is your Social Security, your pension checks enough to cover your monthly load? If it's not, this might be a suggestion for you. You have a lot of equity. Basically, you want to use this if you're equity rich, and basically cash poor is the best way to do that. But you need extra retirement income? That's what you can use it for. Plan to stay in the house for a long time? Well, that's what you would do. Have a significant equity and no other debt? Well, that's what we're looking forward to there. Not ideal if you want to leave the house to your heirs, or you can't afford ongoing home costs, such as the homeowners insurance and taxes. Okay? Explorations on how to not avoid or how to avoid a HECM loan because you're basically over your head with debt. Well, you might want to sell your house and get a smaller home, or this is where that HECM loan comes in, and it'll help you with those monthly debts. How do you get started? I'd love to have a one-on-one consultation with you, because there's a lot of unique things in your situation, and there's a lot of unique things in this type of loan that you really have to work with somebody you can trust and understand. So how do you take action? Well, just do me a favor. You can book a consultation with me, and all this data will be down below, or you can start your application. You're welcome to do that, but I would love, and I'm sure you would prefer to talk to me before you start uploading all your data, giving me your Social Security numbers and everything else. Just go ahead and schedule that consultation. Let's talk your scenario, your specific situation, and what your cost would be possibly, and let's see if this will work for you. So again, I hope you understand how HECM now works, or reverse mortgages. You're not giving the bank your home, and it's just an FHA loan with payment option plans for your mortgage payment. That's basically the easiest way I can explain it. But the biggest area where people really get duped is when you start seeing these celebrities and everything on TV. And the cost for a lot of these things, this is the main issue that a lot of people have issues with. Most costs for a home equity or a HECM loan or reverse mortgage, it could run in the tunes of $20,000, $30,000. So please reach out to us. We'd love to help you in a reverse situation, and also help you save a lot of money when it comes to closing costs. So thanks so much for watching, folks. Hopefully you learned something today. If you want to learn more about mortgages or reverse mortgages, check out therateupdate.com. Our website's right through here. If you want to get your application started, you can click right up through there. Or what I would highly suggest you do is schedule a consultation with me so we can answer any and all the questions that you have before taking that next step. So thanks so much for watching, folks. I hope you learned something in regards to what a reverse mortgage truly is now and how they work. So God bless. If you need to reach me, please, I'll give you all my information right down here as well. If you prefer to call me, you can call me at 844-775-5626, or you reach me by email at dan@therateupdate.com. Thanks so much for watching, guys. God bless, and I hope you found value in my channel.